In the quiet glow of a fading sunset, a question whispers through the corridors of power, across oceans and deep inside the vaults of nations. If every country is in debt, who, then, is the creditor? It's a question that feels almost forbidden swan that shakes the foundations of how we understand money, power, and the invisible machinery behind our global economy. To find the answer, we have to travel back, not just decades, but centuries into a world where the very idea of money was about to be rewritten forever. Our story begins in the aftermath of war. Europe was shattered, exhausted, and broke. Sovereigns were powerful, yes, but they were also poor. Kings no longer feared armies as much as they feared something far quieter: empty treasuries. War had become too expensive, trade too unpredictable, and collecting taxes was just too slow. Empires needed money, and they needed it fast, and in this desperation, an idea emerged, an idea so radical it would alter the course of history. What if money could be created, not mined, not earned, but simply issued out of thin air? And so, the world's first true central bank was born. In 1694, England faced a massive crisis. A costly war against France had bled the crown dry. The government needed £1.2 million, an absolutely impossible sum at the time. Traditional lenders refused. The gold reserves were nearly gone. But a group of wealthy merchants had a different plan. They approached the government with a proposal. "We will lend you the money," they said, "but in return, give us the right to create banknotes, backed not by gold, but by your debt." The Bank of England was formed, and with it, a new reality emerged. The government would borrow money that the bank itself had just created. It was the financial equivalent of alchemy. For the first time, money didn't need physical treasure behind it. It only needed trust in the government, trust in the bank, trust in the paper itself. And as long as people believed, the system would work. But a strange paradox grew quietly beneath the surface. Government debt, once a burden, became something else. Collateral, an asset, a source of power. The more a government borrowed, the more money the bank could create. And the more money the bank created, the more the economy grew. Debt had transformed from a chain into a fuel. Other nations watched this unfold very closely. France, shaken by its own financial failures, tried to copy the model. The United States, still a young nation, would eventually follow. Central banks multiplied, spreading this new blueprint across continents. A silent revolution was underway, but with this revolution came a twist. No one had fully grasped the long-term consequences of creating money out of debt. As centuries passed, the system grew like a living creature, feeding, evolving, becoming more and more complex. Nations borrowed more. Banks issued more. Economies expanded, but so did their dependence on something that very few people truly understood. And then, a second transformation occurred. One, even more dramatic. In 1944, as World War II neared its end, world leaders gathered in Bretton Woods, New Hampshire. The global economy was in ruins. Confidence was broken. Trade had completely collapsed. The solution they chose, a new monetary order. The US dollar was crowned the world's reserve currency. Other nations pegged their value to it, and the dollar itself was tied to gold. For a moment, it seemed stable, logical, and safe. But beneath the surface, the same ancient problem lingered. Governments spent more than they earned. Economies needed more money than they had. And debts just kept growing. And then, in 1971, President Richard Nixon made a decision that changed everything. He ended the dollar's convertibility into gold. Suddenly, money was no longer anchored to anything physical. It became a pure idea promise, a belief. Nations could borrow without limit. Banks could create money through lending. And debt ballooned into the trillions. Which brings us back to the question that started it all. If every country owes money, who is the creditor? The answer is not a single villain in a dark room, not a secret empire, not some shadowy individual holding the world by its throat. The truth is far more complex and, in a way, far more unsettling. Countries owe money too many forces. Two other countries, two commercial banks, two bondholders, two pension funds, two corporations, two their own central banks, and sometimes two themselves. A government bond, bought by your bank or your pension fund, becomes part of the national debt. When nations owe money, they often owe it to the very citizens who rely on them for stability. Debt isn't just numbers on a screen. It's the architecture of modern society. But this system contains a mystery one that's almost philosophical. If money is created from debt, and debt is never fully paid back, then the system must keep expanding. It must grow, or it will collapse. It's like a shark that has to keep swimming to survive. Debt fuels economies, builds infrastructure, and creates jobs, but it also traps nations in cycles of borrowing, just to pay back previous borrowing. It's a loop with no clear end, and yet, the world continues to function. Countries continue to trade, governments continue to borrow, and banks continue to create money with the stroke of a pen. Because the system isn't designed to end, it's designed to continue indefinitely, which leads us to the hidden truth at the heart of our story. The real creditor is not a person, not a nation, and not an institution. The real creditor is the system itself, a network of agreements, beliefs, and expectations woven together by centuries of history. A structure built on trust fragile, yet somehow enduring. A machine that requires constant motion to survive. And we ordinary people play a role in this story too. Every mortgage taken, every loan signed, every bond purchased is another thread in this vast web of global debt. We are both the borrowers and the lenders, both the beneficiaries and the participants in a system we rarely even think about. So, what does this all mean for the future? It means the world runs not on gold, not on oil, not even on technology, but on confidence. Confidence that governments will pay their debts. Confidence that banks will endure. Confidence that tomorrow's money will still have value. If that confidence ever breaks, even for a moment, the system trembles. History has shown us this in crashes, in panics, in crises that ripple across nations. But history also shows that the system adapts, it shifts, it evolves, it rewrites its own rules. Because the biggest illusion of all is that money is permanent. In truth, money is a story we all agree to believe in. And every era chooses its own author. The first bank changed the world by turning debt into money. Modern governments changed the world by turning money into policy. Central banks changed the world by controlling the flow of both. And now, as nations sink deeper into debt than ever before, a new chapter is being written, one filled with digital currencies, artificial intelligence, and economic forces that move faster than any bank created centuries ago. But the old question remains, a question whispered across every stock exchange, every treasury, every vault. If every country is in debt, who's the creditor? Perhaps the answer is this. The creditor is the system we built, the story we sustain, and the belief we share. A belief that has held the world together, and could, one day, remake it all over again. Thanks for watching. If you found this journey into the world of money interesting, don't forget to like, subscribe, and hit that bell for more stories that explain our complex world. See you next time.